Copper is really the essential metal for electricity. Cheap and very conductive, it has been used in electrical wiring for over 200 years. But with increased power demands from AI and accompanying data centers, increasing construction of renewable energy sources, and new sales of electric vehicles expecting to increase rapidly in the future, are all placing supply pressure on copper, which is already showing problems of shortages. And this copper deficit is only projected to get worse over time. This chart shows the projected widening in the gap between production and demand for copper, reaching a gap of around 6 million tons in 2030. This will bode well for the copper price, sending it much higher. Surge Copper is one of the fewer and fewer companies attempting to make up the supply gap, with copper mine projects in the pipeline currently hitting a woefully low level. So not a lot of future copper supply slated to come on the market anytime soon. Surge is a British Columbia-focused copper explorer with an advanced resource on its Berg and Utsa projects. Surge has a preliminary economic assessment of the Berg resource only, which has strong numbers like a 30-year mine life, production of 5.8 million pounds of copper equivalent over the life of the mine, a 20% IRR, and an NPV of over $2 billion, making for a very economically viable project. Let's now compare Surge to other copper companies with recent economic studies to check out how it stacks up against its competitors. You can see that Surge at the very bottom of the list has very comparable numbers to the median of their peers. However, the value proposition compared to the median in the last two categories is extremely compelling, and you notice a big difference in the numbers. The second last number is enterprise value to net asset value. This value metric has Surge's Berg 7 times lower than its peers' median. Also, the enterprise value to copper equivalent in the ground is 0.02 or 2 cents for the median, but only 0.003 for Berg, or a third of a cent. This steep discount seems to be unwarranted, as the company has no major issues of any kind that I can find, just a really discounted share price, making Surge's value stand out amongst its peers. Here is the stock chart of Surge. The stock had a run-up after ARM, or African Rainbow Minerals, made a strategic investment of $3.8 million, and a move from 10 cents to over 24 cents happened. The market reacted very positively to a big successful resource extraction company supporting Surge. It seems like a strong vote of confidence in Surge from ARM. The stock since has pulled back to the same price as the ARM news event, and then moved back up a little bit to 11.5 cents. We will look at the price of copper now, as it will greatly influence the share price of Surge. The copper price has been pulling back recently. It looks copper is trading around where gold was trading in October of 2023, where it pulled back away from a rising trend line, possibly following the same pattern. After that pullback, gold made a nice move higher, breaking out over the trend line. It looks like gold could be leading copper, and as a result, copper could follow soon with its own breakout. Power demand from new technologies and the gap in copper supply should be a huge windfall for a copper explorer like Surge. There are relatively few advanced projects in the copper pipeline right now, creating very little competition in the space for Surge. Utsa and Berg are one of a handful of huge advanced copper resource plays held by juniors. The stock is trading at a heavy discount to its peers with very similar economic study numbers. Copper and Surge's share prices have dipped recently, making the reasons to own the stock even more compelling. I own shares in Surge. Please do your own research on this company. This is not financial advice. Thanks for watching, and we'll see you in the next one.